All right, we are just a few hours away from one of the biggest Fed decisions in recent memory. The central bank is set to announce whether it's going to cut rates again or wait it out for another month. Our Fed correspondent Brian Cheung is live in D.C. this morning, watching it all unfold. You'll be in the room where it happens in a short while. Brian, what are you hearing? What are the expectations?
Yeah, well, there's a few things to watch for, Alexis. As you mentioned, this is a pretty closely watched meeting, given all the changes that we've seen in just the last 6 weeks. Keep in mind that we saw a yield curve inversion. We saw heightened trade tensions between the U.S. and China. And then even in just the past few days, the oil supply shock coming out of the Arabian Peninsula, and then a repo market that was squeezed on liquidity just yesterday. So a lot factoring into this decision. But the two things worth watching: first, the dot plot projections. So the Fed will have a new round of dot plot projections. Keep in mind that these are the expectations for where Fed policymakers see rates going at the end of this year through the next 2 years and over the longer run. The dot plot that you're looking at right now is the most recent print, which we only got 2 meetings ago in June, and a lot has happened since then. So interesting to see where policymakers project the federal funds rate being in the short-term to medium-term future based on the print that comes out today. And the other thing worth watching is just the divide on the current FOMC. So as we saw in the last meeting where the Fed decided to cut rates for the first time in over 10 years, there were two policymakers, Esther George and also Eric Rosengren, who disagree with that decision. If the Fed does follow through on the rate cut as Austria expects today, some expectation that maybe the same voters end up dissenting as well, showing the rift on the FOMC as the Fed kind of reaches this critical point on where rates go next.
Brian, the Fed was back in the market this morning regarding the repo rates. We saw a spike in credit costs. Is that another way of thinking that quantitative easing is back in force?
Well, it's possible. And Bank of America Merrill Lynch actually had a note yesterday saying that the squeeze in liquidity funding for the repo market, which is basically kind of the overnight lending for cash area, where a lot of rates actually spiked Monday night into Tuesday night because of the fact that there just hasn't been enough bank reserves out there. So there's questions about whether or not the Fed may have actually tightened its balance sheet too much. And with Chairman Powell headed for a press conference today, maybe a question or two about whether or not quantitative easing could be back on the table, although it is still a very small probability and probably not likely that we'll hear any sort of changes on the current balance sheet policy, at least in this meeting today. But a salient point that you bring up, Brian, about whether or not there's proper liquidity in the system right now.